G'day folks, welcome back to Pete's Investing. It's March 14, 2024. This is a high grade copper analysis. We're broken above the previous channel we were trading in, and now we've got some key Fibonacci levels that are being tested. So let's look at the various charts. First, we're looking at the weekly chart here, and on the ADX it stays very bullish with the ADX breaking to the upside. On the daily likewise, and on the hourly also bullish. The CCO 150, which is our trend indicator as well as a divergence indicator, it's showing no divergence at the moment. On the weekly, on the daily likewise, no divergence, and on the hourly there is a bearish divergence. So if I draw a trend line from that peak to that lower high on the CCI, and from that high on the price chart to that higher high on the price, you can see it's a bearish divergence. So what we look at it is a retrace, and the target area we're looking at will be a Fibonacci retracement. We take it back to this low here, significant low, down to that level, and if I was to draw a minimum target area, that'll be somewhere between the 23 and the 38% level of that Fibonacci range. That's a minimum, so it could actually fall further, and the key area to look out for is 61%. Now going back to the weekly for a moment, if I blow that up and expand that, let me just draw a couple of things here. We've got first of all, we had a bearish divergence back here, hit our target, and that was, if I just restore that, that was based on this lower highs on the CCI versus higher highs on the price, broke down, hit our target. But now looking at it more specifically, if I drew a Fibonacci retracement from that low to that high, you can see that it perfectly bounced down from the 61%. That's why I say the 61% is key in terms of retracements. Now, if it had broken significantly above that, that would have been a reversal of this trend. So that's the first thing to note there. Secondly, I'll show you this other Fibonacci retracement. Let's see what this did to that high. You can see there it's currently resting at the 61% on the weekly. So again, if it breaks much higher than that, we're going to see a much more aggressive continuous bullish mode. At the moment, it looks like it may possibly retrace to the downside. And also, if I do one more Fibonacci extension, let's see what that looks like. So you can see there, it's just broken above the 78%. So nothing really, so it hasn't really rested on any Fibonacci level there. It's about midpoint. So typically, we might see it break at the 100% or even 123% level. So let's leave that in there for the moment. And if I now go to the daily chart, again, this is a different area. So if we go from Fibonacci extension, you can see that's sitting at the 100% level. Let me just make sure that's the smaller area there in that little range there. So that's actually gone up to 100% of that Fibonacci expansion level, and it's bouncing down from there. Also notice here, let me do another thing here. There's actually a smaller time frame here. That'll be the Fibonacci expansion from that low. Let me get rid of that Fibonacci retracement. So from Fibonacci expansion from that low to that high. Let me do that again. It's not working right this time. Let's try that again. Then we expand it. You can see there, maximize that. It's actually hit the 150% expansion level of that smaller time frame. So you can see there that starting from that point there, if you anchor it there, that's from that point there. So there's some key Fibonacci levels hit at the moment, but ultimately what we're looking at is the weekly and daily CCI, and they're both bullish. When they both break above this moving average band, that's when we take bullish trades only, and they must both be, ideally they must both be above those bands respectively on the weekly and daily, or if they break below the band, like it did back here, that's where you take short trades. And if they're if either of those is within the band, we don't take any trades. They're the rules. So if we go down to the trading idea or trading strategy you can look at. So what I've got here, and you can go to the end, wait till the end of the video and you'll see the trading rules. But one main rule is when we've got a Heikin-Ashi on the price chart, when the Heikin-Ashi is green, we go long. When it's red, we go short. That's one rule. We combine that when the weekly and daily are both bullish, and we just showed you on the previous charts that both the weekly and daily CCIs are above the moving average band, we take long trades. So what we've done here is I've put a back test here, beginning at that point there where the CCI has broken above the moving average band. You can see there on the two right charts, the green chart is the average down approach, and this is the stop loss approach. So where it's gone up from there, you would have generated, let me just remove that, you would have generated $607 in trades using the average down approach, or $214 using the stop loss approach. And notice as well on the hourly, it's actually broken within the bands, so you would have stopped taking long trades at that point there, ideally, to be extra conservative. So again, making sure you're trading in the direction of the weekly and daily on the CCI 150 and taking the trades on the 1 hour chart. Of course, you can trade on the smaller time frames like 15 minute or 2 hours, whatever time frame you're looking at, 4 hours, but always look at the bigger time frame. So if you're trading on the daily, look at the weekly and the monthly. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.